Our lead story for April 13, 2026. Multiple sources report that President Trump has ordered a U.S. naval blockade in the Strait of Hormuz. The order follows an impasse in U.S.-Iran negotiations, marking a significant geopolitical escalation in one of the world's most critical shipping lanes. Energy markets saw an immediate reaction to the blockade. OptionsPlay reports WTI crude trading at $104 this morning, with Brent at $103. However, the supply chain risk extends beyond fuel. Analyst Sunny highlights that the blockade now threatens one-third of the global helium supply, sourced from Qatar. This creates a potential bottleneck for semiconductor manufacturing, as the U.S. Navy begins intercepting ships that have paid Iranian transit fees. While negotiations have stalled, 42 Macro interprets the blockade as tactical brinksmanship rather than a permanent closure. This strategy is viewed as a tool for leverage, yet it carries immediate weight for domestic consumers. Iranian officials are already signaling higher costs at the pump, creating a significant upside risk for U.S. gasoline prices as the market reacts to the supply squeeze. While global supplies are restricted, Sunny notes that U.S. energy companies with large shale reserves are positioned as the primary beneficiaries. From this perspective, the squeeze on the energy market acts as a strategic tool to restart the stalled diplomatic process. Shifting focus to Asia, we're seeing a historic breakdown in Chinese credit transmission. Eurodollar University reports that net household loan growth effectively dropped to zero in the first quarter of 2026, marking a new record low. While official data shows non-performing loan ratios held at just 1%, the reality is more complex. State banks are reportedly offering 2-year payment holidays to avoid recording defaults, masking the true scale of the current credit freeze. According to 42 Macro, this March data signals a structural liquidity trap. While the central bank provides support, the credit impulse, the mechanism that turns stimulus into activity, is failing to transmit. This means that despite intervention, capital isn't reaching the real economy, creating a mechanical breakdown in China's growth engine. Turning to the tech sector, Joseph Carlson reports a significant shift in digital advertising. Meta is now projected to surpass Google in total ad revenue. This momentum is supported by high engagement, with the Meta AI app maintaining a top 10 position in the App Store. Moving to the hardware side, supply constraints are now a defining bottleneck for the sector. Sunny reports that demand for Amazon's Trainium 4 chips is so high that capacity is already reserved 18 months in advance. Simultaneously, Intel is seeing a market revaluation as it strengthens AI partnerships and moves to buy back joint venture stakes in its manufacturing facilities, consolidating its production footprint to meet the shifting demands of the AI regime. Turning to corporate deals, Pershing Square has issued a $64 billion bid for Universal Music Group, a 78% premium over its recent lows. Amplify.me reports this is a strategic move for listing arbitrage, aimed at shifting the company to a U.S. listing to capture higher valuation multiples. Shifting to the banking sector, Goldman Sachs reported a 48% surge in investment banking revenue. Meanwhile, Eurodollar University reports that Beijing is shoring up equity buffers through a second round of bank recapitalization. This latest measure involves issuing 300 billion yuan in government bonds. To wrap up, today's signals highlight several names for the watch list. OptionsPlay identifies CF Industries as a primary beneficiary of the Hormuz blockade as nitrogen prices surge. For AI momentum, we are tracking the continued scale of AWS infrastructure and Meta's advertising reach. Finally, Unrivaled Investing points to Veeva Systems, noting its 80% market share in life sciences software, while it trades at historically low cash flow multiples. The naval blockade in the Strait of Hormuz has fundamentally shifted the macro regime today. You can find the full list of sources used for this recap in the video description. If you find these updates useful, please subscribe. This summary is based on attributed source claims for informational purposes and is not financial advice.